how an IUL, Index Universal Life, is used as a working capital account for business owners, real estate investors, and the like. Here's what the 5 major banks disclosed back in 2008. Where did they have their money? It's called their Tier 1 assets. That's money that banks, credit unions have to have on hand, liquid and safe, in the event of a run on their bank. People running in and wanting all their money. It was in BOLI, bank-owned life insurance. Get ready. In this episode, I'm going to show you that a properly structured max-funded IUL is like a financial Swiss Army knife, and it is the dream solution to many financial goals. But this episode, I'm going to focus on this one. Why it's used by business owners that are savvy as a working capital account. And I'm going to give you examples of how I've done it and how many of my clients have utilized it also. So I'm Doug Andrew, and I've been a financial strategist and retirement planning specialist now for 5 decades, helping thousands of Americans optimize their assets and minimize taxes. And when I say asset optimization, I'm talking about increasing the liquidity, safety, rate of return, and tax benefits on their money, okay? These are actually the 4 pillars that are on the front of my book. This book has been flying off of our warehouse shelves, and I'm going to gift you a free copy at the end, so stay with me to the end of this episode. But these 4 pillars right here, liquidity, safety, rate of return, and tax benefits, you can score any investment where people put money on a scale of 1 to 10 based upon, does it pass the liquidity test? Can you access your money when you need it with an electronic funds transfer or phone call? Is it safe from market volatility? Okay, any year that you make money, does that become newly protected principal? Okay, a lot of places where people have their money do not pass the safety test. Rate of return, you got to earn a rate of return greater than the net cost of the funds or inflation, right? And then tax free is way better than tax deferred. And so that's why it's like the dream solution for many financial goals. So let's focus on this. There's a lot of uses for insurance for business owners. And so let's make sure you understand some of this terminology here, and then you'll hopefully get it where you can sort of use it. You can sort of kill 2 birds with 1 stone, okay? So a lot of business owners will do what I do, and they'll use max-funded IUL to accumulate their money, the money they want to keep on hand in corporate-owned life insurance. That's called COLI, okay? And back in 2008, we had 400 banks in America go under, okay? And there were 900 more on the watch list, on the brink of going under. And the federal government asked the 5 major banks in 2008 because, most Americans had no idea how close we were to a total financial collapse back in 2008. And that's why David Walker, the Comptroller General of the General Accountability Office, resigned, because he wanted to tell the public the truth, and the new Obama administration wouldn't let him do it. And David Walker, he is a big believer and proponent in max-funded IUL as a place to have your money, okay? Now, here's what the 5 major banks disclosed back in 2008. Where did they have their money? It's called their Tier 1 assets. That's money that banks, credit unions have to have on hand, liquid and safe, in the event of a run on their bank. People running in and wanting all their money. It was in BOLI, bank-owned life insurance. And people sometimes go, what? Banks own life insurance on who? It doesn't matter. They may buy insurance policies on people that no longer want it because they understand the math and the rate of return. But many times they'll own insurance policies on individuals that are their stockholders, their board of directors, and what have you. And because they understand what it does. See, the owner of the insurance contract gets all of the tax-free accumulation, tax-free income. They don't really care that much about the death benefit, okay? They'll let the heirs, okay, the beneficiaries of the insured, get everything over and above what the corporation or the bank put into the policy and all the interest they earn, because it's tax-free. And so that's where many corporations keep their money, is in corporate-owned life insurance. Okay, they own insurance on the business owner, whether it's a sole proprietor, a partner, or if it's a corporation or whatever. Okay, so that's called COLI, corporate-owned life insurance, and they understand how money works. Well, they also use it as a working capital account, which is what I'm going to focus on here in just a moment. But a lot of business owners will take it out for a buy-sell agreement. Well, you can kill two birds with one stone, because if you use IUL as a working capital account, you could also be using that as a buy-sell agreement. What's that? It just means that if you have a business partner or someone who is working their way up and you happen to die, then you have an agreement that this younger executive will be paying insurance premiums on a policy that then if you happen to die, they get the million or 2 million or 5 million, whatever the death benefit is, that is enough to satisfy purchasing the company from you, so that the deceased widow or heirs don't have to worry about selling the business, because there's already a prearranged party who's going to buy it for X amount of money. Where are they going to get the money? From life insurance, okay? And so that's called a buy-sell agreement. And sometimes you can do it on a competitor or whatever. Well, many savvy business owners use max-funded IUL as their retirement savings plan, because it knocks the socks off of 401ks or Keogh plans and all those others that through the years, pension plans that business owners were tempted to put it in a tax-deferred account, and then later on agree to pay tax when they pull it out. These are totally tax-free. And most business owners make too much money to have a Roth. So this is why savvy CPAs and tax attorneys refer to this as a rich person's Roth. And so they use it for retirement savings and also executive bonus plans. And that comes under Internal Revenue Code Section 162, where you can actually have executive bonuses coming out, but it goes into an IUL because it's totally tax-free, okay? And whereas most other places, you're going to have to pay tax on it down the road on the gains in a tax-deferred account. So there's a lot of huge advantages, but many of my business-owning clients, they understand how money works, and so they use it for this, the working capital account. So many times the business owners will come in and they'll say, oh my heavens, Doug, I get so busy with blinders on in my business, and I realize that, I have a working capital account that maybe has an average of $200,000 in it, and it's in the bank or a credit union because, I'm not thinking. And I understand how money works, but the bank or credit union is only crediting me a measly, pathetic rate of return of 1 or 2%. The current of inflation is coming downstream at 5, 6, 7, 8, 9, 10, and I'm rowing upstream at the rate of 2 miles an hour, but I just think, it has a drive-up window, and so I'll just keep my $200,000 in the bank or credit union because it's accessible. Well, I say, how many situations in your business where you need money to buy inventory or equipment or what have you, which is what you use your working capital for, how many of those situations can you foresee? And if you got that money within 48 or 72 hours, that's soon enough. You don't need a drive-up window. Most of the time. So you have 200,000 in there. Would you like to reposition like at least 100,000 of that, where maybe it's not a drive-up window that you could drive to in 15 minutes, but you could access it within 2 or 3 days, and you could earn a rate of return that's probably double to triple what you're earning in the bank or credit union. And if push came to shove and we really got in trouble in this country, do you know the bank or credit union could tell you, sorry, you can't have your money out of your checking or savings account, especially a savings account, for up to 6 months. Whereas the insurance company, this is where banks and credit unions put their money. See, in 2008, that's where banks and credit unions were putting their tier 1 assets is in insurance companies. And they were paying the average depositor in their bank 1%. They turned around and made 4 or 5%. 5 times, 500% more. Every million, they were paying $10,000 a year in interest. They were making $50,000 by putting it in insurance companies. I'm just saying, Mr. Business Owner, why don't you bypass the middleman and increase the liquidity, safety, and rate of return? Because that's why the banks are taking your money and putting it in insurance companies to increase what? The liquidity, safety, and rate of return on your money. Just bypass the middleman. And so many times business owners say, well, that's a no-brainer. Yeah, let's make room in my IUL for 100,000 or 200,000 or at least half of that working capital that is doing next to nothing in a bank or credit union. Is that making sense? And so savvy business owners understand this. So for example, I've had many business owners through the years that accumulate millions of dollars inside of their IUL, and they're earning average rates of return by rebalancing and diversifying of 10%. I've earned average 10.07, okay? So that means that they're earning a great tax-free compounded rate of return, net, cash on cash. Let's round it down to 10. So they have millions of dollars in there earning 10%, which is way better than a bank or credit union. Now, if they go and withdrew that million for their business, it's because they know that they'll probably make more than 10% by investing in their business. Most business owners know that. But see, when they have an IUL, they don't have to withdraw the million out of their IUL policy. They could, but they're no longer earning 10% on that million, but they might be able to use it in their business to make, 2 or 3 million. Well, yeah, but all I say is you can access money from the insurance company because the insurance company, without question, you don't have to fill out a loan application. They'll loan you the equivalent of the money you have in your IUL policy. You just say, I want to borrow the money because you don't have to qualify. It's your money, but you're borrowing $1 million from the insurance company, and you can borrow at like 2% interest, and they'll credit you 2% on the $1 million of cash value you left there to collateralize it. And so it's a zero-wash loan. It doesn't cost you anything to borrow your money. That's a zero-wash loan. But you know what I do? I'm a business owner. I understand how money works. Most of the time, I don't borrow at a zero net cost. I borrow with an indexed loan or an alternate loan or a participating loan. Those are all synonymous terms. So the rate's going to be higher. So let's say it's 4 or 5%. We'll take the higher one. I borrow $1 million from the insurance company and I agree to be charged 5%. Why would I do that instead of being charged 2%? Because if you agree to be charged 5%, they won't just credit you the 5%, they'll credit you whatever the index rate is on the $1 million that you left in the policy. So if that's averaging 10, you'll be credited $100,000 on that $1 million of collateral, even though they charged you $50,000. How much more is 100 than 50? 100% more. It's twice as much. You're still going to net $50,000 or 5% tax-free on your money after the cost of borrowing the money. Business owners understand this. Would you like to be making 100% more than the net cost of the funds? Well, let me show you what happens many times in the real world. In 2017, I had a savvy business client, and he likes to buy, big apartment complexes or strip malls, fix them up and flip them. He doesn't like to keep them like a landlord. He has a pool of investors that are looking for fixed up properties, and he has a pool of people that want out of their property. They don't want to spend the money to fix it up. They just want they want to sell. So he needed $1 million in 2017 to be used as an earnest money to tie up a multi-million-dollar apartment complex. He called me up and said, Doug, I need $1 million. Would you please email me that form? He knows the form. It's a one-page form. He puts his name and his policy number, which is like an account number. And it says, okay, you would like $1 million. Do you want to withdraw $1 million? He goes, no. Because if he withdrew $1 million, it would no longer be in the policy earning interest. He knows better. Would you like to borrow? Yes, I want to borrow $1 million from the insurance company. Would you like to borrow at a 2% loan, and we'll credit you to a zero net cost loan, and it's tax free, and he doesn't check that box most of the time unless we're headed for a recession. And I advise him just do the zero wash this year. Most of the time he does the index loan. So he did, which is a 5% interest rate. Why would he borrow $1 million and be charged 5 when he could borrow it 2? Because the $1 million that he has collateralizing that loan is being credited with whatever the indexed rate is. That year, that was 25%. He capped, it's called being capped out. He capped out at 25. He was credited 250 grand on that $1 million that he left in the policy that was collateralizing the $1 million he borrowed from the insurance company at 5. How much more is 250 than 50? Okay. It's 5 times more, 500% more. He netted 20% or 200 grand, which is 400%, okay, more than what he had. He netted 200 grand tax-free on his $1 million while he was technically using that money to buy, fix up, and flip a strip mall and make about $3 million bucks. Are you getting it? That's what savvy business owners do. That is a working capital account, okay? So if you want to learn more, I would recommend that you study a chapter in this book, especially on the right brain side. This is actually 2 books in one. It's been flying off of our warehouse shelves. It retails for $20, up to $70 on Amazon. If you buy it there, thank you. But I'll gift you one free. So you simply go to laserfund.com or click on the link below and contribute a nominal amount towards the shipping and handling. I'll cover the rest of that, and I'll pay for the book and fire out a hard copy to you via priority mail. Now, it's 2 books in one. This side is about 200 pages, 14 chapters with all the charts and graphs and explanations of how this works. If you're more of a right brain learner, you learn more by stories, you flip it over to this side, and this has 12 chapters. 1 chapter talks about working capital, and you can read that and see the examples of how savvy business owners use this as a working capital account. So you'll see why I do that and how they become their own banker. But while you're in there claiming your free copy, if you like to listen and learn or watch and learn, there's formats for that. You can register for a free educational webinar, but you can even schedule an appointment to talk to a certified IUL professional that has to pass a 100-question proficiency exam with 100%. There's a small handful of IUL professionals that are certified. Those are the ones you want to talk to be able to see how it is done correctly, because unfortunately, I would say over 95% of IUL agents in America do not know how to structure it correctly to perform the best for you. So this is not about me. This is about you and your brighter future. If you're a business owner, act now.